Hi there. Welcome to Investagrams market overview. Tonight we're gonna do a review of where the index could potentially go, and we're also gonna take a look at some stocks, some interesting stocks to watch out for this week, and probably next week. So a few weeks back in many of our sessions and our charting shares, we highlighted the level 7,000 to 7,200 for a potential stabilization. And the index indeed bounced at that point, making a low near 7.1 here. But then the bounce was short-lived, only doing a max of 7.3 plus, and it didn't even hold there. So that's the problem. That gives us the indication that the index has is gonna really encounter more challenges in the future. So at least it could have held above 7,250, but it did not. So that gives us the confirmation that the index is weak. So right now it closed below 7,000. Our initial support level, it's doing 6,975 now. So where could the index potentially go? Looking at this structure, the next stabilization point would be around 6.7 plus. Okay, so here. So if you look at this level from where we are, that's another 3 to 5% drop. Okay, so just so that we could visualize how are we gonna trade or invest in the next 1 to 2 weeks. So this is just another 3 to 5% drop, and from here I think we could see we're gonna encounter many opportunities already. Okay, so which names are we gonna take a look at? So let's use a screen. So why is the index becoming so weak? So let's take a look at which stocks are at their 1-year lows. So we use this metric, 52-week low, 5% or less above the low. So meaning these stocks are trading within 5% of their 1-year lows. And then we choose a filter on the value average. Value average for the 20 days must be greater than 5 million, just to make sure that these stocks are really trading. So if we run the screen, we get 9 records, nine results, and from here you can see ABSP, AGI, Kalata, EDC, Globe, GTCap, Meralco, TEL, and URC. So these names, Globe, GTCap, Mer, TEL, URC, these are the heavyweights of the index, right? So let's take a look. TEL for PLDT, if you've been following us on Investagram or in Facebook and on our videos, we've been mentioning that a break of 1.6 would be deadly for this stock. And during that time we may look like fools, right? But it was too way ahead. We were estimating that this stock could potentially go at 1.2, but now it's doing 1.4. So that's just 200 points more. So if 1.4 breaks, we could expect, and if based on our index and our estimation of the index, yeah, it can really go at 1.3 to 1.2. Okay, so from here, just track that down. That's another 6 to 10% drop. So depending on how bad the fund managers would want to dispose their PLDT holdings. But again, in a challenging market environment, you don't want to be holding a stock that has weak core earnings or parang decreasing potential of its future business. So PLDT is definitely one of those. And same thing with Globe. So right now 1.4, we wait we wait and observe how it behaves at around 1.300 to 1.2. But from here, I think we could find an opportunity within this range. So let's check out Globe. So it's almost like PLDT. It broke below 1.5, now 1.490. So again, the thing here with Globe, let's try to zoom out a bit. Weekly chart, 1.490 here. the funny thing is it almost has the same price points with Tel. So ideally, you would wanna pick this up at 1250, 1200. So that's if you look at this range, that's a bit far. So this is around 15 to 20% drop more. So maybe at 1.3 this would be interesting already. But then at this point, when the market is being fragile and weak, you wouldn't want to rush immediately on weak names. Okay, so the good thing is if you have cash, you got the leisure of waiting. So yun lang. We need to observe how they fall down, and then let's wait and see once we get stronger signals. But for telcos, yeah, there can be another 10% plus drop. So just be cautious on these names. And what other stocks? AGI. I'm just gonna clean out the drawings here. So AGI, this is another weak name. Trading at all-time lows or one-year lows. So if you zoom out on the bigger picture, it's doing 1284 now. I think this would gain interest at around the 12 area here. So there would be, at this point, there would definitely be some interested buyers at this area. Okay, so just observe if the stock would find stability here. So which other stocks could give us opportunities in the market? So let's track Mega World. Mega World, we highlighted a potential bounce at 360 to 380 around this area. 380 here. The 360. And yeah, look at this candle. It indeed made a bottom, but it just tracked the index. So yun nga, the difference between trading bull markets and falling markets like this is you should be very careful. So when you pick up extreme sell-offs, so we got at 360, 370, and if you were able to buy there, that would be a good 8%, 10% trade. So whenever you're able to pick up stock on this kind of structure, the opportunity would be short-lived because it's a sell-on rally structure. So 420 to 440, this stock would have a hard time. And indeed, when it reached near 420, it fell down. So now it broke below 380, closing at 378. So where could we see Mega World? So the level here would be, we adjust it a little bit lower. So we observe how the stock would fare at around the 350 area. Okay, so within 350 to 360, we see whether this would hold ground. So that's for Meg. Let's check out Ali. So one of the index heavyweights. So it's doing 3280, and it broke our initial levels at 34. So when you see a breakdown like this, you should expect follow-up selling. So right now, where could we expect Ali? The initial level right now is 30 to 31. So at 30, that's a psychological level already. We can see that we can expect buyers to flock in this stock. But given if markets are really volatile, it could even overshoot on the downside at around 28.50 to 29 on this gap. Because on the index, we're expecting for a gap fill. Okay, so let's go back to the index. Here, the gap, there's a gap here. See that? So there's a gap here, around 6-7 plus. So that's where potentially we could find support. So again, when you're trading, when you're looking at the index, it's not supposed to be perfectly, what do you call that? It's not supposed to be perfect. You can't perfectly predict the index movement. So what we do is we make it simple. We just estimate the ranges on where the index could potentially hold ground and bounce. So the question is not where the index would specifically go, but the question is what would you do if the index goes at that level at 6.7 or at 6.6 plus. So definitely these are support levels already. So the index is just a guide. So the thing is, when the index reach this level, you should look at the stocks that you want to observe. So example, MEG. So if the index is trading at 6.7, where could MEG potentially trade? It could do 350, or if suddenly foreign sellers are more aggressive, it could go at a lower range at 330 to 340. But the point is, you have to expect already the downside that's about to come. Okay, so if it's 330, then that's another 12% drop. But it's good for those who are in cash. But if you're heavily exposed in index names like this, then you should have a plan of whether adding on these strategic points or trimming your positions before they fall down. So it all depends on you. But for us traders, you have to be prepared on these kinds of scenarios. Okay, so what else could we look at? There are some names that are relatively stable, like you see MPI, it's doing 683. So unlike other blue chips, it held up quite well. So where do we expect MPI? You could expect it to hold around 650 to 660 at this point. So from here, if you compare it to other names like Meg, Ali, Telglobe, MPI is holding up quite well. So maybe because of the infrastructure, I mean the infra it being an infra play, so it's gonna benefit from the many projects of Duterte. So the theme is generally strong. Yeah. So MPI is one of the stable names you want to look at. So let's compare it with another name, another utility play, EDC. So this one is a definite breakdown. You see here. Wait, let's zoom out a bit. So here. The price is already contracting at this point around 580 to 590, and after contracting, after resting for a while, the next direction where the breakdown or breakout would be, that confirms the next big move. So instead of breaking out going up 6 plus, it failed and broke below 570. So that confirms that, oops, we should avoid this name for a while. So it's now 530, and you can see that it could potentially retest this area around 5 to 515. But I think this will fall down given the weakness in the market. I think there's news here with Duterte wanting to open up the nuclear plants, so maybe it would affect EDC's business, core business. Not really sure. I'm not much of a fundamentalist, but looking at the price action, we could expect EDC to test 5, but then I'm doubtful if it could hold at these levels. So you could probably expect it to break below 5. So let's just see. That's just my opinion. Okay, so what else could we look at? URC. So this is one of the favorite name of many investors for the last 6 years. So the problem with URC is you can't go up forever, right? So a lot of investors made money on this stock thinking that this would be permanent heaven. But then we looked at the price structure, and in a few charts ago, like 2 weeks, 3 weeks ago, we were highlighting that you should be very careful if it doesn't hold above 180. So you see here, for the last about 7 weeks, it was just going 180, 185, having a hard time, and then now we finally confirm a breakdown. So it's now at 170. So where could we see URC? Potentially Our estimated range is around 150 to 160. We're not really bullish on this name. Okay, so if you're long term, you have all the luxury to wait for lower levels. So be careful because these are one of the heavy stocks. These are one of the most crowded trades. I mean, for most fund managers, one of the strongest runs for the last 6 years. So be careful when these strong previous leaders fall down. So we might see a big move on the downside. Okay, so initially 150 to 160, but then we're not too keen on this. Every rally would be sold. Okay, so let's go back to the PSEi. What's our strategy? So potentially, if we're able to pick up around 6, 7, again, we don't aim to perfectly predict. So the thing is, if the index enters 6, 8, and the stocks you're monitoring are showing resilience, showing strength, then you could probably tranche buy there. Because 6, 8, 6, 7, that's just 100 points. And then if the index overshoots 6, 6, that's another 100 points. But then the support levels are getting tighter and tighter on those levels. So you should observe how the index behaves relative to the stock you wanna buy. Okay, so 6, 6, 6, 6, 6, 7 should be a strong support at this point. And if we pick up, so let's just switch on the daily chart. So around this area, if you're able to pick up at this point, any bounce at 7,000, so probably the scenario is we're gonna fall for 3 to 5 more days, and then you could pick it up and have a bounce, have a good December. But then we don't expect any smooth December, so it's still gonna be a very erratic market. So on bounces like this, you could expect any bounce to 7,000 or 7.2 should be sold at this point if you were able to get at the bottom. So rallies at 7.2, 7.3, 7.4. So it would totally depend on how global markets perceive the Philippines as well. I mean, how global fund managers perceive the Philippines as well. At this point, with Trump winning, there are certain adjustments to be made because of Trump's policy of focusing on the insides of U.S., taking out BPOs, providing more jobs. So there's an possible impact to our OFWs, and you could expect that our currency is trading at 49 pesos at this point. Here, take a look at the peso. It continues to weaken. It's now at 49. So you take a look where it is at around 50. This is a very strong warning signal. Okay, so this year we might visit 50, and then it might bounce back down. But then for 2017, if our currency continues to hover above 50, then that's a strong warning sign that, hey, you're not in a bull market anymore. You're not in an easy or strong PSEi anymore. You're not in the easy days are over if this hovers above 50. So you have to adjust accordingly your strategy. All right. So besides the political risks, the geopolitical risks, when there are potential rate hikes coming, it would be interesting how to see the world manifest in the next 3 months. So let's take a look at global index, S&P 500. The funny thing is it's currently trading at all-time highs. Wow. So it's doing 2164. All it has to do is break above 2180 to 222, and that's an all-time high. It could probably trend higher with Trump's optimism, with optimism on Trump. But then we're not sold on that reason. I think this is just a fluke. Okay, so don't be fooled by the positivity in US. From here on, I think it we've detached from the US markets already. So you could see that while S&P was trading at all-time highs, and you could look at the Russell 2000 as well. So this represents the broader market, 2000 stocks in the US. So just to have a general feel of how the global markets are. So it's almost nearing its all-time highs as well. So this confirms the general optimism in the US markets. So while they are trading at their highs, our index sucks, right? So our index is being very fragile. So we see here that the correlation has definitely detached. Okay, so just to review again, if the index doesn't take 7,200 anytime soon, then you could expect another 5 to 3% drop, around 650 to 67 plus. Okay, so from here we're definitely gonna see some opportunities, so you should be ready and very quick on your trades, but at the same time you should be careful on your position sizing, and each trade you should already know what your stop level is. So when you're trading bounces, you should know at what point, if the stock goes down further, at what point would you be mistaken, at what point would you exit. Okay, so from here, any bounces at 7,000 to 7,200, 7,300 are meant to be sold off. So good luck, guys. I hope we could find a strong bottom in the market. So that's the Investagrams market overview. See you soon. Thank you. Follow us on Facebook and join us on our social network in Investagrams here. So just type investagrams.com. The internet is loading for a bit. If any one of you works for PLDT, please tell your management that, come on, man. Come on. Give us quality service. So here, if you go and log into Investagrams, for those who are still new, you can just observe our website. We have lots of traders that are sharing their insights for free here. Yeah. And you can ask questions. So here, this is an example. You're sharing our initial overview here. Okay, but then we have to make adjustments now since the index has already moved past that level. Alright, so you can join us here in our community and ask questions or share your thoughts, and we definitely answer you back, and let's try to help each other. That's what Investagrams is all about. Okay, thank you guys.